Okay, let's unpack this. It's August 5th, 2025, and the U.S. market, well, it's signaling another strong open, kind of extending that big rebound from yesterday. But let's not get carried away. This rally feels like it's really perched on a knife's edge. You're probably seeing the headlines, but what's actually driving this push and pull? Our deep dive today is looking right at that, how these really aggressive hopes for a Fed rate cut are smashing up against some new tariff realities. It's that classic bad news is good news thing, but maybe a bit shaky this time. Almost like the market's trying to find that perfect sweet spot, you know? Weakness, but not too much weakness.
Exactly. And what's so fascinating here is the main bullish force, it's crystal clear. Market folks have just dramatically upped their bets on the Fed easing up soon. After last Friday's jobs report, that was way below what anyone expected, plus those downward revisions.
Yeah, that really caught people's attention. Big miss.
Huge miss. So now, the odds of a rate cut at the Fed's September meeting, they're priced at over 90%.
90?
Hmm.
Wow. That's quite the conviction.
It's a powerful driver, especially for those growth stocks, the tech names. NASDAQ futures are up again pre-market like 0.33%. But at the same time, you've got this big cloud hanging over everything. President Trump's tariff policies, we've got new duties kicking in August 7th, ranging from, 10% to over 40% on some things.
Right, that's just 2 days away.
Precisely. And businesses, investors, they're scrambling to figure out what that actually means. Costs, supply chains, prices for you at the checkout. We're already hearing warnings from giants like Walmart, Procter & Gamble, basically saying, get ready for higher prices.
So that's a direct hit, potentially slowing growth and pushing prices up.
That's the stagflationary risk, exactly. A drag on growth, but fuel for inflation.
So, okay, what does this messy picture mean for you as the market opens today? This session really feels like a test, doesn't it? Can that rate cut optimism keep overpowering these economic and geopolitical headwinds? We're seeing green in Europe, the DAX is up nicely, and Asia mostly closed higher. But the U.S. story just feels layered.
It really is layered. And speaking of things to watch today, that ISM Services PMI at 10 a.m. Eastern, that's huge.
The big one for today's data.
Absolutely. This report could either, confirm the slowdown story that's fueling those rate cut hopes, or it could challenge it, maybe suggesting the Fed doesn't need to rush. It's pivotal.
So the bad news is good news narrative kind of hinges on this.
Very much so. We'll be looking closely at the main number, obviously, but also that prices paid part. Any sign of inflation there complicates things for the Fed.
And beyond the big picture, it's a busy day for earnings, too. We've already had some good news this morning, right? Like Leidos, Ball Corporation, both beating estimates, raising guidance even.
Yeah, some bright spots showing resilience despite everything.
But the one I think everyone's watching pre-market is Caterpillar.
Definitely.
Yeah.
CN gives you that ground-level view of global demand, especially with trade tensions simmering.
What they say about tariffs.
Yeah.
That's going to be really telling for the whole economic story.
And it's not just earnings. The M&A scene is buzzing, too. Look at CommScope surging, over 80%? They announced a huge asset sale to deal with their debt.
Wow. Okay. Big move.
And Unity Group jumping over 60% after closing its Windstream merger. So companies are definitely making moves, restructuring.
But not all good news on the corporate front.
No, you've got Figma, newly public, taking a big hit, down over 25%. Looks like profit-taking. And TG Therapeutics down almost 18%. They actually raised guidance for their main drug, but missed on the EPS number. So mixed signals there.
And after the bell, eyes on AI.
Absolutely. AMD and Supermicro, their results are really going to test that whole AI narrative. Is the hype real, or are expectations just too high? Another Goldilocks situation, maybe. If you zoom out, it feels like the market has this cognitive dissonance right now. It's cheering for economic weakness because that means rate cuts.
Right.
But it seems to be kind of ignoring that the weakness could get much worse because of these new tariffs.
Yeah, celebrating the symptom while ignoring a potential cause.
Exactly. Which leads to the big question for you watching this. When does bad news for the economy stop being good news for stocks and just become plain old bad news?
It's such a narrow path the market's trying to walk. That perfect Goldilocks weakness, just enough for the Fed, but not, a real downturn. So key risks today. Maybe that ISM services number comes in too strong.
That would challenge the rate cut story, yeah.
Or Caterpillar sounds really downbeat about tariffs. Or maybe AMD or Supermicro disappoint tonight.
All potential negatives, but there are opportunities too, right? If the data confirms the softness, the rally might continue. Plus those M&A deals, earnings surprises, lots of moving parts.
So as you watch the market unfold today, keep a close eye on how these powerful, sometimes conflicting forces are playing out. It's quite the balancing act. That's our deep dive for today. Keep those sources coming, and we'll keep digging into them for you.